So in today's session, we'll try to understand the basic business process which we come across in the finance applications, including the supply chain applications. If you are aware of this basic business flow, we'll be able to work on the finance applications and along with the supply chain application process related connectivity. Okay, we should aware of the basic business process flow that we'll discuss in today's session. Let's take simple example. Say Mr. X, I'm taking Mr. X. So Mr. X is doing this course. If Mr. X is doing this course, Mr. X may identify a required laptop to attend these classes and to do the practice. That is nothing but we call as Mr. X got a requirement of buying the laptop. If Mr. X is a student, definitely the student should get the permissions from their parents. The student should get the permission from the parents. That means Mr. X should get the approvals from the parents. The first point is Mr. X identify the requirement. Requirement is laptop. Why laptop is required is doing the course. And Mr. X should get the approvals from the parents. After getting the permission from the parent, what Mr. X has to do to buy the laptop, has to visit the shops. Visit shops, or else you can try online. Physically, Mr. X can visit the shops to buy the laptop, or else you can try it online. After visiting the shops, Mr. X can request for quotation. Okay, Mr. X can request for quotation. So Mr. X can give the specifications, what is the configuration of laptop, which laptop, what is the RAM, everything, all the configurations, whatever required as per the need. Accordingly, he can request for quotations and he will receive the quotations. First, what he will do, he will request for quotation. He will request for quotations from the different shops and finally he will receive the quotation. Quotations from shops. After receiving the quotations from the shops, Mr. X has to look into those quotations, who is offering best price, what are the configurations required for the laptop, the brand, etc. all by considering who's giving the best price. To identify that, he has to look into all those quotations, which shop is giving the best quotation, and he has to check who is giving the best price and all those parameters, that you may call it as quotation analysis. You may call it as quotation analysis. Mr. X will get the quotations from the multiple shops as per the laptop configuration and all, and Mr. X will analyze the quotations. If Mr. X is not aware of analyzing the quotations and that computer related, the configuration, the brands, etc., he may take some help from his friends or someone else. Ideally, the analysis need to be done. Then finally, Mr. X will choose best quotation. Okay, Mr. X will choose the best quotation. Mr. X will choose the best quotation. After choosing the best quotation, it's very simple. You can visit the same shop and you can make the payment. You will make the payment and they will get the laptop. That's it. It's a simple process when you talk about one individual. This is all about the process which need to be followed by individuals if they need something to buy and to pay. So they have to identify what they need, and if the person is a student, okay, they have to get the permission from the parents that we are writing here as approvals. Then the person will visit shops, or virtually you can just access online shops. Finally, the person will request for quotations. They'll receive the quotation from the shops. The person should analyze the quotations, and finally they'll choose the best quotation. Accordingly, they'll pay and they'll get the laptop. This is in case of individuals. If you take the same case in case of company, multiple departments should involve in this process. Here who is involved? Only one person, because this is related to individual requirement. If you talk about company, to handle all these activities and few additional activities also to execute the same process, multiple departments will come into the picture. Let's take the example of one company has to buy something. Here let's take this simple case. Say we have a inventory department and purchasing department, other departments. How these will have a communication, in which scenario and what activities each and every department will perform, will discuss. Say for example, we need 100 laptops. One company required 100 laptops. When they need 100 laptops, why they need 100 laptops? Say their customer is asking. Okay, they have one customer. They got one order from the customer. Okay, they got one order from the customer. Customer placed one order to some XYZ organization. The company name is XYZ organization. Okay, XYZ organization. XYZ organization received an order from their customer for 100 laptops. When they receive order from the customer, what they do is they'll check whether 100 laptops are available in the inventory department or not. When they check within the inventory, only 50 or say 70 laptops are available. Within the inventory department, they have 70 laptops, but there is order from the customer for 100 laptops. 30 laptop shortage they have. Now what they have to do? They have to, generally if they don't have stock, they will check whether they can purchase and supply within the time period what customer can accept. So now the sales department, who will receive this order from the customer? Sales department. Okay, sales department can receive the order from the customer. When sales department will receive the order from the customer for 100 laptops, the sales department will check with the inventory department whether stock is available or not. Say stock is not available, only 70 stock is available. In this case, what they can do is they can plan to purchase and supply. Since 70 laptops are available, they will plan to buy 30 laptops. Say the customer is asking that laptops within 10 days. So now they will plan, if they can buy the laptops within 1 week, they can supply to the customer, since customer is asking within 10 days. Now what inventory department will do is, there is a demand. What is how much? 100 laptops, but already 70 they have, 30 laptops they have to buy. To buy that laptops, inventory department will take the responsibility of raising the requisition. They'll create the purchase requisition. We call as PR, purchase requisition. Okay, what is the requirement? 30 laptops. To purchase the 30 laptops, the inventory department will raise the purchase requisition. Within the purchase requisition, they clearly specify what they need, by which date they need, if required, from whom they have to buy, and all the details they'll specify. Simple point we have to understand is, purchase requisition talks about what is the requirement in the company. What is the requirement? 30 laptops we have to buy. So now we are talking about the requirement from the customer. Sometimes the requirement may be internal requirement. Within our company, we need 10 laptops, maybe for employees. So in that scenario also, if the company is in the computer sales, whether stock is available in the inventory or not, they'll verify. So it may be internal demand or external demand. Internally, you may need some material or stock, or external demand means maybe from your customers, whatever it may be. So there is some demand in the company. In that case, we have to check with the inventory department whether stock is available or not. If stock is not available, we have to raise a requisition to purchase, that we are calling as purchase requisition. The inventory department should take the responsibility of raising the purchase requisition to buy whatever they need. After raising the purchase requisition for 30 laptops, they have to get approval internally. Within the inventory department, they have to get the approvals. So within the inventory, who's the right people who has authority to say okay or no against the requirements which they are raising, they have to get the approvals. Ideally, they can get the approvals from the inventory manager or warehouse manager. Once they get approvals, okay, so what they have to do is, the point is, the inventory department responsibility is maintaining the stock. They'll maintain the stock. They'll maintain the stock and they look after item stock inflows and outflows. If organization is purchasing, they'll receive that stock into inventory. If organization is selling the stock, they'll ship that material to the customers. And they'll perform certain inventory transactions also. Those could be inflows and outflows, receiving material and moving the material from inventory out. So those sort of activities inventory department can perform. Stock maintenance and inventory transactions. Along with that, if any shortage within the inventory department as per the requirement, they can create the purchase requisitions, they have to take the approvals. This is what inventory department can involve very primarily. They'll maintain the stock, they'll perform within the warehouse any transaction. If you are moving the material one place to another place within the inventory, if any other activities related to stock, they'll handle all those. Along with that, if any shortage within the inventory department, they can create the purchase requisition and they have to get the approvals. So this is the primary responsibility of inventory department. The inventory department cannot involve in the purchasing activity. So once they get the approvals for the requisition, what they are raising by specifying so and so requirement, the inventory department will pass this purchase requisition information with the purchasing department. Okay, with the purchasing department. So based on approved purchase requisition, the purchase department can create RFQ. RFQ stands for request for quotations. Okay, request for quotation. The purchasing department can raise the RFQs to the vendors, suppliers. The purchasing department will start contacting the suppliers saying that we need 30 laptops, we need within 1 week. Okay, please provide the quotation price. We'll request, please provide the quotation. That's how purchasing department will request for quotation from multiple vendors. When they request for quotations, the suppliers will provide the quotations. That means the purchasing department will receive quotations from suppliers. The purchasing department will request for quotations. The purchasing department always can keep in touch with the suppliers to get the quotations. Whenever purchasing department will request for quotations, the suppliers will provide the quotation. That means they will receive the quotations. Okay, they will receive the quotations. After receiving the quotations, they will look into those quotations, who is giving the best price, who is accepting the best terms. That's all they have to look into, that we call as quotation analysis, or simply you can say quote analysis. The quotation analysis, what they do, they'll check who is giving the best price. Say supplier A may offer one laptop price is 20,000 rupees. Supplier B can offer 25,000. That is a price parameter. Along with that, supplier A may offer the price is 20 and you have to pay immediately. Supplier B may say price is 22,000, you can pay after 2 months. Supplier C may say price is 25,000, you can pay after 6 months. So the purchasing department will look into all the parameters, okay, which is the best quote as per their policies. Okay, even price may be $25, but 25,000 rupees. But if they are giving 6 months time, they may choose that vendor only to buy the laptop. There are many other criteria they follows. It's all about we call as quotation analysis. Who is giving the best price? Who is giving the best terms? Terms means how we have to pay. And other terms also will include. We are talking about payment terms. So the purchasing department will look into all those points by in the process of analyzing the quotations. They analyze the quotations, then they'll choose the best quotation. If company is very big, to do all these activities, there could be separate department called as sourcing also. Okay, there will be separate department called as sourcing department, or else these activities also can be handled by purchasing department only. Okay, in some companies there will be separate department called as sourcing to do these activities. They'll request for quotations, they'll receive the quotations from vendors, they do the quotation analysis, they choose the best quotation. All can be done by sourcing department. Otherwise, purchasing department also can do. So once they choose the best quotation, what purchasing department will do is they will create purchase order. Okay, they'll create the purchase order. That means they'll place the order to supplier. Before they place the order to supplier, they have to get the approvals internally. Okay, approvals required. So approvals are required. They'll create the, once they choose the best quotation, say the so-and-so supplier is giving the best price and best terms, then they can place the order to that supplier to purchase, that we are calling as purchase order. When they are placing the purchase order internally from the purchasing department, they have to get the approvals. Maybe purchasing manager, the purchasing department head or manager, somebody who has the authority to approve, they can approve it. So they get the approvals from the purchasing department and they'll place the order to supplier. Once they place the order to supplier, supplier can supply the material. That means the XYZ organization will receive the material. Okay. XYZ organization, they'll receive the material. Whenever the XYZ organization will receive the material, how much stock they received, further they'll create the GRN. Okay, how much stock they are receiving, further they'll create the GRN. One second. We'll create the GRN. GRN stands for Goods Receipt Note. So purchasing department will place purchase order to the suppliers. The suppliers will respond to the purchase order by supplying the material. So say we requested for 30 laptops, supplier will supply 30 laptops. The same will record in our books as a GRN, goods receipt note. How much goods we are receiving, for that we'll create the note. So this physically happens within the inventory department. Okay, this information should be tracked by purchasing department, since purchasing department only will be in touch with the suppliers. So once our organization will receive the material, we have to record the GRN. Say you received 30 laptops, 2 laptops got damaged. So in that case, we have to return the 2 laptops to the suppliers. That also can be handled in the inventory department. Even purchase department also can involve in that activity, that we call as purchase returns. Okay, purchase returns. So the purchase department will look after the purchase returns. They'll keep in touch with inventory and they'll just involve in the purchase returns. So these are the responsibilities of purchasing department. Okay, if there is separate department called as sourcing, these activities can be handled by sourcing department. Primarily purchasing department, okay, will involve in these activities. Even purchasing department can involve in the purchase requisition also. But as a process, try to understand this. The same how we can handle in the system we'll discuss. So if there is any requirement in the or company, okay, the purchasing inventory department will raise the purchase requisition and they'll get the approvals. The approved purchase requisition they'll pass to purchasing department. The purchasing department will request for quotations from vendors and they'll receive the quotations from the vendors or say suppliers. And once they receive the quotations from the suppliers, they do the quotation analysis to find out which supplier is giving the best price, which supplier is giving the best payment terms and other terms. And finally, they choose the best quotations and they'll place the order to the supplier with approvals internally. Internal approvals they have to take before they place the order to supplier. And once the organization will receive the material from the supplier or goods from the supplier, or in our example laptops from the supplier, they have to record the GRN, goods receipt note, and if required they'll do the returns to the suppliers that we call as purchase returns. So what are the next step we will discuss? Whatever we discussed so far, any questions on these points please? Any questions here please?
I have a question.
Please.
Yeah, suppose like is that always a starting point is the inventory, or sometimes the starting point will be the requisition, and sometimes like when they are
both are same. You mentioned in inventory and requisition. Purchase requisition means requisition.
Right. Suppose at which point they will check, like either choosing the best quotations and which vendor, whether like to get the stock internally or to get from the supplier. At which step they generally check?
Oh,
is
see,
that at
yeah, that point is here. See, 70 laptops available in our inventory department. Say you have it 2 warehouses. You may get 30 laptops from other warehouse also, right? Here also they'll check. In the inventory level only they check. See, there is order from the customer for 100 laptops. You have 2 warehouses. Okay, 2 warehouses. Whenever you get order from the customer, when you check the stock availability with the inventory department, if inventory department says only 70 laptops are available, remaining 30 they may get from other warehouse also if they have multiple warehouses. Otherwise they can plan to buy from the suppliers. Yeah. The inventory level only the decision will be taken.
okay.
Yeah.
But not at the sourcing.
No, not here. Here only they'll take care of sourcing to get the material into organization. Sourcing ideally they don't involve internal movements. Internal movements they'll take the decision here. Inventory department.
Thank you.
Yeah, that's. So any other questions here, please?
Is there any difference between suppliers and vendors?
No. That's just 2 different terms which we use. Both are same.
Okay, thank you. Okay.
Yeah. Fine. So once we receive the material from the supplier, we have to create the GRN, goods receipt note. Now what purchase department will do is, the purchase department will pass this GRN information with the payables department. So based on the GRN information, payables department will create purchase invoice. Okay, purchase invoice. Within the purchase invoice, what details we can have? Before that, here within the purchase order, what details we can have? Within the purchase order, you can find we are placing the order to which supplier, okay, and supplier address, and what item we required, how much quantity we required, by which date we required, to where supplier has to supply. These are the details you can find in the purchase order. Accordingly, supplier will ship the material to given location. We'll give the location where supplier has to send the material also. By following that, supplier will ship the material to the respective location we'll receive. And once we receive the material, the purchasing department will pass this GRN information with the payables department by stating we received so and so material from so and so supplier, so you please make the payment. Okay, that's how they'll pass that GRN information to the payables department. Based on the GRN information, payables department will create the purchase invoice. What details you can find in the purchase invoice? Who is the supplier? What is the supplier address? How much we have to pay? What item we purchased? When we have to pay? Okay, when we have to pay? How we have to pay? Whether we have to pay cash or check or electronic payment process? What is the all the details you can find in the purchase invoice. Say for example, as per purchase invoice, we have to pay in 10 days. Say we arrive in 10 days, the payables department will make the payment. Okay, payables department will make the payment. So the payment information, the payables department will share with the cash department. Okay, payable, what is the responsibility of cash department? Cash department responsibility is they maintain the bank accounts. What are the bank accounts are owned by company, they maintain the bank accounts. So along with that, they do the bank statement reconciliations. Bank statement reconciliations. What does it mean by bank statement reconciliation? What cash department will do is they'll get bank statement. As per bank statement, how many payments are processed in the last month, for example, as per bank statement. As per bank statement, how many payments are processed. As per payables department, how many payments are processed? Payables. How many payments are processed? They have to check. So when they do the bank statement reconciliation, they may identify their bank statement is saying last month they processed 15 payments, but their system, their books are saying only they processed 10 payments. Now they have to identify the reasons. As per bank statement, 15 payments are processed. As per bank statement, 15 payments are processed. As per their system, only 10 payments are processed. Why? The difference they have. They have to identify the mistakes. Say they may identify 5 payments they forgot to enter in the system. Reality, they issued the checks, but they forgot to enter in the system. That could be the reason. Otherwise, the bank statement is saying only 10 payments are processed. Your system is showing 20 payments are processed. The reason could be you issued 20 checks. That is the reason you recorded in the system. 10 checks only came to the bank for clearance. Remaining 10 may be in the process of clearing. Later you will come to know those will reflect in your bank statement maybe after some time. Or else your system is showing 10 payments. As per 10 payments, your bank account is showing 20 payments, but your system is showing 15 payments. As per your bank statement, 20 payments. As per your system records, only 15 payments. Why 20 payments are showing in your bank statement extra? There may be fraud happened in the company. So this all your company can identify by doing the bank statement reconciliation. That means the bank statement they will reconcile with the payments what they processed. That means the bank statement reconciliation what they are doing, that is related to payment reconciliation. If cash department wants to do the bank statement reconciliation, the payables department should share payments data with the cash department. Other side, the cash department will get the bank statement from banker. So payments data they'll get from the payables department, bank statement they'll get from the banker. So between the payables payments data and the bank statement, they can do the reconciliation that we call as bank statement reconciliation, so that they can identify the mistakes. So this is a responsibility of cash department. What cash department does, they maintain the bank accounts and they'll perform the bank statements reconciliation. Okay, this is the responsibility of cash department. They maintain the bank accounts and they do the bank statement reconciliation. From where they get the bank statements? From the banker. From where they get the payments information? From payables department. So what are the records? What records payables department is maintaining? Purchase invoices based on the GRN. Payments they are making against this purchase invoice once they arrive at the due date. The payment information they have to share with cash department for bank statement reconciliation purpose. And the payables department will share purchase invoice information with the asset department. What is the business case? When you talk about purchase invoices, the purchase invoices you can create when your company is rendering the services. Okay, when your company is taking some services, you have to create the purchase invoices to make the payment. The purchase invoice may be related to services. If not services, the purchase invoice may be related to expense which you are spending. Or else the purchase invoice may be related to inventory related purchases, stock related purchases. Now we take an example of buying the laptop. That means the invoice what you have to create in the payables department that is related to inventory related purchase invoice, stock related. Simply you can say stock. Or else sometime a purchase invoice what to create that may be related to asset purchase. Whatever it may be. You may take some services, you may render some services from the vendors, or you may spend some expense, or you may purchase the stock, or you may purchase the asset. Whatever you do, you have to pay to the suppliers. Okay. So the purchase invoice you can create with these different purposes. Maybe services you taken and you spend some expense, or you purchase some stock. Yeah, I'll give you the time for your questions. Please let me explain few points. Okay. We'll spend some time for your questions. Okay, let me explain few points. And you may just have a purchase invoice against whatever the asset your organization purchased. In all these cases, you can create the purchase invoice. If the purchase invoice is related to services, expense, or stock, the payables department no need to report this purchase invoice information with the other departments. If the purchase invoice is related to asset purchase, the purchase invoice information they have to pass to asset department. They have to tell to asset department saying that, so there is one asset purchase has happened. These are the details. That's how this payables department should share asset related purchase invoice information to asset department based on asset related asset purchase invoice. The asset department will create asset in the asset department. They'll create asset. Based on the usage, they'll calculate the depreciation. Okay, when you say asset department, that is fixed assets. Okay. Cash also asset, but that is the current asset. Land, buildings, vehicles, okay, and machinery, all these we call as fixed assets. So only in case of fixed asset purchase only, the payables department will pass that information to asset department. So based on those details, asset department will create which fixed asset is purchased, okay, what is the cost and all, everything they'll record. Based on the usage, they calculate the depreciation. Okay, this is a point we have to understand. Any questions here, please?
Yeah, Lakshman, will you be showing all these activities, including
everything. Yeah, we'll see.
Including activities related to SCM applications also in instance?
Yeah, SCM, whatever we have to understand, we'll see. As a part of SCM, we will do the setups in the inventory, we'll do the setups in the purchasing application, and we'll see how to requisition, how to approve it, how to create the purchase orders, how to create the receipts. Okay. So this cycle we'll understand, which is connected with the finance, those we'll discuss. I'll cover it.
Sir, one question.
Please.
Related to services, service procurement, do we define services in inventory module or we do not define services in inventory?
You can create
as item code.
Yeah, you can create an inventory. Services, items, stock, asset, everything you can maintain within the inventory.
Do we need to keep service?
There will be some parameters which you can set for the definitions. Okay.
Okay. No, but my question is again, sir, service basically what Oracle tells us do not define an inventory. That is why I'm asking this question to you.
See, you can define as a inventory, but you can disable that inventory as a asset. Okay. You can disable certain parameters so that system won't consider as that is inventory. But as item you can create if you want to track. Or else without creating inventory also you can handle that. Okay, when you create the transactions, you can select line as a services. Directly you can enter. You can enter as a part of transaction. That is also you can do.
Without item code, that means, right? Yes. So my question is that
you can create with item also you can do, but you have to set the parameters where system should not treat as item. Those parameters you can set and you can track. That is also possible.
Okay, good. Yeah. So now one problem which I have in EBS is that the services purchase department wants to see the last PR rate. Okay, obviously because the service
don't mind. Okay, if you
Hmm.
have some issue or if you want to go deeper about that, since you have some knowledge, these points better we'll discuss in the end of the session. Okay, let's move on.
No problem, sir.
Flow understand.
Only thing is, I was looking whether, because service, it's a very 1 minute question, sir. Maybe you can answer later. That's not a problem.
Yeah, go ahead, no problem.
Sir, the challenge which every company will have is that the purchase department will like to do spend analysis, right? So the PER for services, they want to analyze against the last purchase vendor price or the last PER which is approved. Basically, at the PO. So if I don't use the item code, that becomes a problem. If I use the item code, then it is not reflecting in the procurement module, the service procurement. So these are the problems.
Correct. Though see, since those are there is no straightforward solution, we generally go with the workaround. We'll talk to the client which workaround is okay for them, preferable. We'll go with some workaround and we can handle that kind of scenarios.
Fusion, what is the best practice, sir? The point was that Fusion, what is the best practice?
Same as EBS. There is no difference in case of this transaction creation process compared to EBS. The functionality we have as is. But the way of configuration, how we handle, those are slightly different. The core process and all same as EBS. We'll see when we are working on where if you have any query related to that point, we'll discuss there. Okay.
I have a question.
Yeah.
In the list like service, expense, stock, assets, and expenses, are those very similar to the travel expenses or something like where in future
it could
they
be
borrow some?
It could be travel or it could be some other miscellaneous expense.
Okay, got it.
Any admin expense, any expense.
Sure.
Yeah. Say just the team plan for outing, you will raise the purchase order. Okay, that has to be finally converted to invoice to make the payment to vendor. So it could be any expense. Take any expense, the invoice what you create in the payables that can refer any expenses. Any other questions here, please?
Yes. Now, as the same example here, when we received 30 laptops and 2 of them are broken, so do they pay the invoice for the 30 laptops or only for 28 laptops, and how that will be taken care of?
Yeah, it totally depends on the scenario. Say for example, we received 30. Okay. You can go on mute. I'll explain. We are getting some little background noise. So we received 30. We received 30 and we passed this information to payables department. Payables department created purchase invoice and they paid. Say payment terms are immediate. After some time, you realized 2 laptops are damaged. In that case, we will do the returns and already amount you paid that you can adjust in the future. Or else what you can do is you received 30 quantity before you created invoice in the payables, but you not yet paid and you identified 2 are damaged. In that case, you will create purchase returns for 2 quantity. How much is the price? Accordingly, you can reduce and you can pay remaining amount to the supplier. Okay. Or else when you return that, supplier may says they'll replace. So in that case, if there is time to make the payment, so meantime supplier will replace. That won't impact on your invoice. Whatever the invoice you created for 30 quantity, you can pay accordingly. That totally depends on scenario how it is going to happen across the departments. In multiple ways you can handle. You can just take any scenario. That's what we have to understand. Any other questions here, please?
If the laptop that we are getting 30 laptops are within 2 different organizations, will the process be same?
Yeah, see the purchase orders what you are creating, you can create from one organizations or multiple organizations, but process will remain same.
Okay.
In procurement, there is a concept called as centralized procurement. Okay, or global procurement also, where you can procure for multiple organizations. Whatever it may be, process same. You will receive and you will create invoice and you will make it.
will the asset department also calculate appreciation also?
Yeah, appreciation also. If you purchase, your organization purchased land. In case of land,
Okay.
generally there is no depreciation, right? Always appreciation. So the fixed assets, they'll maintain asset department, they'll maintain the land as a fixed asset, and they don't calculate depreciation. Instead of depreciation, they calculate the appreciation. That we call as
Okay.
they revalue the asset value.
Okay.
That is possible. So this is how these are the different departments which are involved in the different activities. So inventory department is taking the initiative of raising the purchase requisition. They are getting the approvals. They are passing that approved requisition information with the purchasing department. Based on that, they are requesting for quotations. They are receiving quotations. They are doing analysis. They are choosing the best. With approvals, they are placing the order to the suppliers. Whenever organization will receive the material that we are recording as GRN, if required, we perform the purchase returns. Based on the GRN information, payables department will create the purchase invoice. Once we arrive the due date, we'll make the payment. The payment information payables department will share with the cash department. The cash department responsibilities, they maintain the bank accounts, they do the bank statement reconciliations. And if this purchase invoice is related to asset purchase, payables department will share with asset department. Based on that, asset department will create fixed assets and they'll calculate the depreciation. So to prepare the reports across all these department related activities, the inventory department, payables department, cash, payables, asset department, all departments will share data with a common department to prepare the financial reports. If you talk about payables department, you can create the reports related to purchase invoice and payments only. If you want to prepare the reports related to asset, only in the asset department you can prepare. If you want to prepare any report related to stock and all within the inventory department, but if you can send all these departments data to common department, common place, here you can prepare any sort of reports. So this is how we have it departments. This is how the between the departments you can see the communication. So to handle this department specific activities, okay, we have a separate applications from Oracle.
Yeah, Lakshman sir.
Yeah, please.
Yeah, I have a question here. Suppose payable department creating purchase invoice. By seeing this purchase order,
Yes,
can they identify that invoice they have to create for fixed asset or some expense or
yes,
some
yes.
services?
Item level, we set those parameters. The item is asset related or expense or not expense or asset. Everything item level, you can set the relevant parameters for system understanding. Yes. When you are creating the purchase invoice payables against the PO, yes, system will understand whether that is expense or inventory item or asset. Will identify. Accordingly, we'll set the parameters. When we are working on the inventory application, when you create item, I'll just touch base those points. Yep.
Okay, one more question.
Yes.
Suppose payable department creating purchase invoices,
Okay.
then they inform to asset departments. Is there any process that they have to, is there any mandatory thing that they have to inform or system will intimate to cash department? Means the data will go into both direction.
1 second here. When they are passing that asset related invoice information to payables department, there is no cash will come into the picture. Right? Cash department to maintain the bank account. They no need to communicate anything with the cash department because the transaction nowhere relevant. So payables department is passing asset information to asset department. When you say asset here, fixed asset, not current asset. Yep. No communications required.
So what about the payment? Means
payment, yeah, that's what we discussed.
When
we make the payment against an invoice, that invoice may be service related, expense related, stock or asset, doesn't matter. For which invoice you are making the payment doesn't matter. Every payment information payables department should pass to cash department for the purpose of bank statement reconciliation. That is there. Every invoice related payment information they have to share with the cash department for reconciliation purpose.
So basically we can say the payable department have the two responsibility, one for creating the purchase invoice, second one is for payment.
Correct. Primarily, these are two primary activities: invoice creation, payment, and other side they have to pass these details with the relevant departments. Payment to cash, purchase invoice to asset department in case purchase invoice is related to asset purchase. That's all. Correct.
Okay, sir. Thank you.
Yeah. Fine.
Yeah, hi sir. I have a question, Gautam here.
Please.
So actually, in this example which you explained, we procured 30 laptops from the supplier.
Suppliers.
We can track those laptops as an asset for the operation. But thing is, we procured those laptops for the customer.
One second. So we never treat as asset. See, asset is different from inventory. So you are dealing with laptop purchases. Asset laptops are not your assets. Laptops are in your inventory items. Okay. If you are buying a laptop to use in your company, your employees require 10 laptops. You are buying. Those will become assets to your company since you are using. If you are buying the laptops to sell to your customers, those are not your assets, just inventory stock. That's all.
Okay, where we need to differentiate whether it is for internal purpose or for the customer.
Item level you can specify, and again you can specify that item can be sold or not.
Inventory item or
you can specify. If that is the item, that is the internal purpose you are using, that you have to take into fixed assets application. Your asset department also will maintain the same.
Correct.
So one question now, same. I'm buying a laptop which is for my company and I'm also selling, okay, to the customer. So will I define the same item cannot be defined?
Yeah.
So same item cannot be defined as inventory and asset together. So do I need to define for the same laptop two item code?
Yes. If you are dealing with that item, you are buying, sometimes you are using. So in that case, so you will create the item. I mean, against that item, you will create the purchase order and all. How much you purchased? You purchased, but how much quantity? Say you purchased 10 laptops. Okay, you purchased 10 laptops. From the 10 laptops, how many you are going to sell, how many you are going to use, how many you are going to use in your company, those many you can maintain in the fixed assets. We have a concept called as mass additions. Okay, we have a concept called as mass additions. In the mass addition concept, you will understand how much cost you have to transfer to fixed assets to create as asset. You can differentiate that. Okay, if you don't maintain in the fixed assets, okay, if you are receiving into inventory, that is inventory stock, the same if you are going to maintain in the fixed assets, so that you can treat as that is your asset which you are using internally. You can differentiate that. With the transaction creation, you can differentiate those. In the mass addition process, we'll see that, how that can be handled. Please. Okay, there is a lot of background noise from someone.
So so at the end, we will need to define two item codes, right? One for inventory and one for asset.
No. I mean, if you want to handle in the two processes, I mean, the same item you store in the inventory,
right,
and you want to take into your, fixed assets, right?
Correct. Because sometimes I'm using as my asset, sometimes I'm using for trading as a stock, and I'm selling it, right, to the customer.
Correct.
So is there any way, sir, with the same definition, the way you are telling, from payables, I decide that this is now asset and it goes to mass addition to asset, or it is for selling, so it is not going to FA?
Yes. See, in the item level, you can see when you deal with the item, there will be an account called as asset clearing account. If you address that item definition with asset clearing account, system will identify that is the asset item which you are going to maintain in the fixed assets. If you don't provide that account you cannot, that item information you cannot transfer to fixed assets to maintain as item. Or else with the same item you have a different scenarios, okay, which conflicts with other scenarios, you can maintain the different item codes. Just here simply in Fusion we call as Fusion or EBS items we call. You might be referring item code with some different application. Okay. So that's how just you can maintain one item, master item, different parameters. Some Chakrabarti, somebody. There is a lot of background noise from your end. Please. Okay. So ideally, just with one item, you can manage one item can be used in the multiple processes. But as per your business scenarios, if those are conflicting, you can create as a separate definition also. Okay, you can create as a separate definitions so that the process will become very smooth.
So one last question.
Please.
If I have to capitalize service, will it also follow through the same process? Because I will not do GRN for the service.
Correct. You don't receive anything. Correct. I mean, as a physically, you don't receive. Yes, in that case,
so will
service I will create invoice based on the purchase order. No receipt.
Yeah, hi, Lakshman. One quick question. So, is this quotation analysis is part of general purchasing process, or you are explaining in general?
So
for Fusion purchasing process, that quotation analysis is part of purchasing process, or you are just generally explaining?
Ideally, quotation process and all can be done by sourcing application. To understand the complete flow and taking those steps also here, ideally those will be done in the sourcing application, sourcing department.
Okay, thank you.
Yeah. To understand the sequence of flow based on the requirement, I'm just addressing here. So these ideally these activities you cannot do in the purchasing department. Some companies does these activities also, but ideally this is a part of sourcing department. Yep. Done. So these are the points we have to understand. Okay, to maintain the stock, to perform the inventory transactions, we'll see all this when we are looking into the system. It would be more clear. Now try to understand how the communication takes place between the departments. And inside of the department, when you talk about anything, like when you talk about purchase invoices, we have different type of purchase invoice, different type of payments. When you talk about fixed assets, different type of assets we have, and everywhere we have a different types. Those we'll see in our classes more detail level. This is just to understand very high level how the process flow happens across the departments. What sort of communication can be established between the department, what is the purpose, that's what we are trying to understand. More the detail level we'll see once we start working on the application. So when I talk about inventory department, they'll maintain the stock and they'll perform the inventory specific business transactions, they'll raise the requisitions and they'll get the approvals. To do all these activity, along with that many other activities also can be done. To do all those activities, we have an application from Oracle which we call as Oracle Fusion Inventory Application. Short name is INV. Okay, inventory INV. By using Oracle Inventory, any question? Somebody unmuted.
Sir, is it called product management or inventory?
Inventory only. Inventory. I'll talk about what is the product management, what is the inventory, how these two are different. When we are working on that, I'll explain, but we have to understand this is generally as an inventory only. Inventory only you can perform all inventory related transactions. Product management, if you are aware of that name, product management to create items only. Okay. Stock maintenance, inventory transaction, requisitions, approval, everything you'll do in the inventory only. Yeah. Product management is different from this inventory. I'll just, when you are working on that cycle, we'll work on that product management also. But here, so you don't need to take that name, only inventory you have to use. So we have an application called as Oracle Fusion Inventory. By using the Oracle Fusion Inventory, you can maintain the stock, you can perform inventory transactions, and you can create the purchase requisitions and approvals. There are many other activities which you can handle by using the Oracle Fusion Inventory application. To handle the purchasing activities, okay, primarily by using the purchasing, you can write, you can create the purchase orders, you can create the just even requisitions also system supports to do here. To do any purchasing related activities, we have an application from Oracle Fusion Purchasing. In short, we call as PO. So within that purchasing department, the primary activity what we do is creating the purchase orders. Purchase order means PO. So within the purchasing application, the primary activity which we do is creating the purchase orders. That is the reason short name also PO, Oracle Fusion Purchasing. So ideally these activities we can handle within the sourcing application, and these activities you can do within the inventory application. Reality, within the purchasing application you can create the purchase orders, and even you can create the purchase requisitions from purchasing application. But to understand the process flow, take this, okay? So as a part of purchasing department, these activities can be handled. But if they have a separate departments as a sourcing, so these activities can be done by sourcing department. So within our Fusion Purchasing application, these activities you can do with the sourcing application, creating the purchase orders, creating the purchase requisitions. Purchase requisitions you can create from inventory as well as purchasing application also. Okay. So GR and goods receipt node you can create from inventory. To understand the process flow, just take all these points in the system. How it is possible, we'll come to know when we are working on the system. And this based on the GRN information, payables department will create purchase invoices. Once they arrive the due date, they'll process the payment. To create the purchase invoices and to process the payments, we have an application from Oracle. We call it as Oracle Fusion Accounts Payable. We call it as just AP. By using Oracle Fusion Accounts Payable application, you can create purchase invoices and you can process the payments. Okay, here we are discussing very primary points. Reality, if you want to create the purchase orders, if you want to create the purchase invoice, we require the supplier. Supplier can be created from purchasing application as well as payables. We are discussing about the process oriented points. That is the reason we are not touching supplier creation, etc. Okay, those we'll see as a part of system. So we are the process point of view, those we don't need to understand. Done. So once the payments are processed by payables department, this data need to be shared with the cash department. They'll perform the bank statement reconciliation. To perform the bank statement reconciliation, they need bank accounts also. So cash department responsibility is maintaining the bank accounts and performing the bank statement reconciliation. There are a few other activities also they do that we'll see in our classes. To understand this process flow, just these 2 points you can understand. Cash department responsibility is maintaining the bank accounts and performing the bank statement reconciliation. To maintain the bank accounts and to perform the bank statement reconciliation, we have an application from Oracle, what we call as Oracle Fusion Cash Management. This you can call as CM. CM means cash management. We have separate application called as cost management also from Oracle. That is the reason they generally refer this application name as a CE also sometimes. So you can use any short name CM. When you talk about financials, the CM refers cash management only. But CE also they use the name. CE stands for cash entry. That means cash management. That is a short name. And to collect the data from all these departments, that means for each department we have a separate application. The system environment, to collect the data from the different applications, we have an application from Oracle we call as Oracle Fusion General Ledger, GL. We have a General Ledger application. Okay, this General Ledger application can collect the data from all these applications to prepare the financial reports. So this is the process we have to understand. if there is any requirement in the organization, if organization is going to purchase from the suppliers, okay, how they make the payment, how that information can be passed to other departments, finally how the data can be collected in the common department as per applications that we call as general ledger application. So this process we call as P2p cycle. P2p cycle. P2p stands for, P stands for procure, 2 means TO2, other P stands for pay, and it is cycling activity, cycle. Procure to pay. P2P means procure to pay. That means the cycle right from procurement, okay, right from procurement to till we make the payment. That means primarily these 3 departments. Procure to pay cycle means right from procurement. Okay, when you want to procure something, you have to take the initiative of raising the requisition. Right from requisition to till you make the payment, the cycle is covering. That is the reason this cycle, this process we call as procure to pay cycle. Why we are calling as the cycle? It is cycling activity. It will keep repeat. Tomorrow you want to buy. You have to raise the requisition. You have to get the quotations, analysis, choosing the best, placing the order. Okay, creating invoice, making the payment. Again, after 1 month, you want to purchase, same process. If you buy today one item, let's say laptop, tomorrow you are going to buy, these activities you can bypass. Okay, within 1 day, there won't be any too much of fluctuation for rates and all. Already you identified the supplier with the quotation process and all. Tomorrow, if you are going to buy the laptop and all, again, you can raise the requisition, you can get approvals. You can skip these steps. Already you have a supplier who is giving at best price. Directly you can place the purchase order, you can receive, and you can just create invoice and you can make the payment. So this is cycling activity. That is the reason we are calling it cycle. Okay. So this cycle we are calling as procure to pay cycle. Okay. The procurement process will start with the requisition and it will end with the payment. So that is the reason this cycle we are calling as P2P cycle. In the P2P cycle, the primary departments or applications which are involved is inventory, purchasing, and payables. So these are the core applications. These are the core applications which are involved in the P2P cycle. Along with that, these are the additional applications which are connected with the payables to receive the data into this respective application, to perform the reconciliations, to create the assets. Finally, all the applications related data will send to general ledger application for reconciliation for reporting purpose. Okay, this we call as P2P cycle. Okay, procure to pay cycle. Any questions on this P2P cycle, please? Okay. Now let's talk about sales process. Okay, let's talk about sales process. Say you received one order from the customer. You received one order from customer, 100 laptops. 100 laptops from the customer. Who will receive the order? Sales department will receive the order. So when sales department will receive the order from the customer, they'll record the sales order. They'll record sales order. Sales order SO. When they get order from the customers, who will receive the order? Sales department will receive the order from the customer. They receive. They recorded sales order. The sales order says 100 laptops they require. Now what they'll do is they'll check with inventory department. Okay, they'll check with inventory department whether stock is available or not. They'll check. If stock is available, they'll supply to customer. If stock is not available, they'll initiate the procurement process. Say they received order from the customer for 100 laptops and they created sales order in the sales department. Now they'll check with inventory department whether stock is available or not. Yes, available. If stock is available in the inventory, they'll book the sales order. The sales department will book the sales order. Booking sales order is nothing but giving the confirmation to the customer as we are going to supply. Okay, just we received order, it is booking sales order is nothing but confirmation. On what basis we can give the confirmation to the customer? Based on the stock availability. Say they received a sales order, they received order from the customer and they verified with inventory department stock is not available. Even stock is not available, they can give the confirmation to the customer. Why? Say customer is asking 100 laptops within 10 days. And if they check within the inventory department, they don't have one laptop also. So they can talk to the purchasing department whether they can procure 100 laptops within 5 days or 6 days. Anyway, customer required within 10 days. If purchasing department says yes, we can get within 1 week, then they can go ahead and they can give the confirmation to their customer as we will supply 100 laptops within 10 days. Even they don't have stock. That means there is supply possibility. How? They'll procure and they'll supply. So there could be stock within the warehouse, they'll give the confirmation. Even stock is not available within the warehouse inventory department, still they can book the sales order. Say they have a stock in the inventory, they book the sales order. Once stock is available in the warehouse, they have to move that stock to the customer location. To understand how they move to the customer location, we have to understand how inventory can be structured. Here you can see how inventory could be structured. Take this entire area as a inventory. Within that inventory, they can have a sub inventories. Okay, they can have a sub partitions which we call as a sub inventories. Maybe in the sub inventory 1, they may maintain the laptops. In sub inventory 2, they can maintain the desktops. In sub inventory 3, they can maintain the phones. In sub inventory 4, they may maintain the bikes. With which items they are dealing, those items they can maintain separately in the different sub inventories. Say they are purchasing from supplier. When they are purchasing from supplier, first they will take into the staging area. There will be a common place within the warehouse. First the truck may come and unload that material in the staging area. Which material they have to place in which sub inventory, accordingly they'll move it. Okay, first they'll receive the material into staging, or you can call as receiving area. Staging or receiving area you can call. You can receive the material into staging area or receiving area, then they'll place into respective sub inventories. Even if you are going to sell to the customers, the actual material will be in the sub inventories. So if they want to sell any material to the customer, first they have to move the material from sub inventory to the shipping area. Okay, the same common place you will receiving, staging, shipping area, any name you can use. They'll move the material from the sub inventory to this shipping area. From here they ship to the customer. When they move the material from sub inventory to shipping area, the truck may come and we can load that material into the truck. Then you can ship to the customer. That means when you are receiving the material into organization, that means inflow, or when you are selling to the customer, outflow. In both cases, material has to pass through the staging area, or receiving or shipping area. So this is how you can find the inventory, the basic structure. So we have inventory, the total area is inventory. Within that, some area we are calling as staging. Staging, where we can store the material for a temporary purpose before you ship to the customer or before you take into sub inventories. Sub inventory is the one where we maintain the actual stock. Okay, here temporary purpose, you can just keep the material. Now here we received order from the customer and we created sales order. The sales department created sales order. They given the confirmation to the customer. The next step is we have to move the material. Say laptops are available in this sub inventory 1. Now what inventory department has to do is they have to move the laptops from sub inventory 1 to shipping area, because they have to ship to the customer. They have to move the material from sub inventory 1 to shipping area. Who will do this activity? The inventory department will do. Or else there could be shipping department also in some companies. Okay, shipping department also, some companies. Total how the things can be organized in the respective organization, accordingly they'll do. Finally, this activity takes place in the inventory department. Okay, whenever we move the material from sub inventory to shipping area, or call it a staging area, so we will do that activity inventory department. Inventory department will move the material from sub inventory to staging area. Whenever they do that activity, the inventory department will pass to sales department saying that the 100 laptops we moved from sub inventory to staging. So whenever inventory department will do that activity, sales department will record the same activity in their books as a quick release is happened. Quick release. Quick release is nothing but moving material from sub inventory to staging. We call it quick release. The physical activity is done by inventory department, and sales department is responsible to execute that sales activity. So if customer is going to give a call, they'll give the call to sales department saying that what is the status of my order. If they get the proper update from this inventory department, they can answer to the customer queries. Okay, so they can say like, yes, we already packed the material. If inventory is not updating what they are doing against the sales order, sales department cannot have any information to reply to the customer queries. That is the reason whenever inventory department will move the material from sub-inventory to staging, the same information inventory will pass to sales department. They'll record in their books as a pick release. So whenever inventory department or shipping department will move the material from the staging to customer location or shipping area to customer location, the inventory department will pass that information sales department. Sales department will record in their books as a ship confirmation. They'll record in their books as a ship confirmation. Shipment is confirmed. They'll record in their books. If they get any call from the customer, they can answer. Yesterday, the truck we just started from our location. You may receive the material by today, end of the day, or tomorrow, based on the distance. They can give the update to the customer. That is the reason against the sales order, what are the activities are happening within the inventory, picking the material or shipping related, always inventory department should update to the sales department. Say we shipped 100 laptops to the customer returned 5 laptops because those are damaged during this shipment transportation. So in that case, the sales department should take the responsibility of handling the sales returns. If required, the sales department will take care of the sales returns also. Okay, this is a primary responsibility of sales department. If there is any order from the customer, they record as a sales order. They'll check with the inventory department if stock is available or if there is any possibility of supplying the material to the customer as per the requirement. They'll book the sales order. Whenever we move the material from the sub-inventory to staging, they'll record as a pick release. Whenever we will ship the material from our organization to customer organization, that we track as a ship confirmation. Any returns from the customers, that will record as a sales returns. Now, the sales department will pass the ship confirmation details with the receivables department. Based on ship confirmation details, the receivables department will create sales invoice. Okay, they'll create sales invoice in their books. What information you can have in the sales invoice? The sales invoice you can have who is the customer, what is the customer address, what items we sold, how much customer has to pay, when customer is going to pay. All these details you can have in the sales invoice. Then whenever we get the payment from the customer, receivables department will record the receipt against that sales invoice. So we sold material for 20,000. So customer paid, the receivables department will record the receipt. And this receipt related information, okay, the receipt related information, the receivables department will share with the cash department for bank statement reconciliation. Already we discussed cash department to maintain the bank accounts and to perform the reconciliation, bank statement reconciliation. In P2p cycle, we have seen payment reconciliation. Here, receipt reconciliation is required. So bank statement, cash department will take bank statement information. As per bank statement, how many receipts are reflecting, how much amount we received, payments are received. As per receivables department, how many receipts we have, those two need to be reconciled. For that, the receivables department will pass receipts information with the cash department for bank statement reconciliation. Maybe as per your receivables department, you receive 20 payments. As per bank statement, your bank statement saying only 15 payments. You have to find out the reasons. So your receivables department, yes, received 20 payments, and 20 they might have submitted for clearing, but 15 only cleared. Or else 5 payments they not yet submitted to bank for clearing. So 20 checks they received. 15 checks they submitted bank and those are cleared. That is the reason those are reflecting in the bank statement. 5 they not yet submitted. That is the reason that those are not reflecting. That they have to identify. By doing the bank statement reconciliation, they can come to know what is the reality. And finally, all these departments can share the data with the common department to prepare the financial reports. So here, already we discussed inventory department place. To handle the inventory department related activities, we have Oracle Fusion Inventory application, which we call as short INV. And sales department, recording the sales order, booking the sales orders, performing the quick release, ship confirmation if required, sales return. To do all these activities, we have an application from Oracle which we call as Oracle Order Management. Oracle Fusion Order Management. The short name for this is OM.
Sir, is it distributed order orchestration? Website is showing distributed order orchestration.
You are
What
referring
is that?
something else. Don't refer all those things. Okay, that is one of the process inside of this application. Okay, do distributed order orchestration. Okay, that is a workflow name. That is not an application name. Workflow name. You will understand in our classes. We'll work on O2C cycle also. There you will come to know. Okay, you can follow these points. Okay. So that is the workflow name what we are talking about. That is a one piece within this order management. So this is the application which you can use to create the sales orders, to process the sales, to book the sales orders, to handle that quick release, ship confirmation against the sales orders, sales returns. And once these activities are done by the order management or sales department, the ship confirmation details need to be passed to receivables department. Based on that, receivables department will create sales invoice and the receipt when they get the payment from customer. To create the sales invoices and to receipts, we have an application from Oracle, that is Oracle Fusion Accounts Receivable. Yeah. Done. By using Oracle Fusion Accounts Receivables, you can create the sales invoice and you can create the receipts when you get the payments from the customers. This point already we discussed. To maintain the bank accounts and to perform the bank statement reconciliations, we have an application called as Oracle Fusion Cash Management. CM. Finally, all these applications data you have to get into one place to prepare the financial reports. For that, we use application called as Oracle Fusion General Ledger application, GL. Okay, so we get the order to sales department. Those need to be verified with inventory. Finally, those can be processed by receivables, and that information can be shared with this. Final data goes to general ledger application. So this cycle, this process we call as O2C cycle. O2C cycle. So O2C stands for, O stands for order, O stands for TO2, C stands for cycle. Sorry, cash. Cash. This is cycle. Order to cash, right from receiving order from the customer to till we receive the cash from the customer. Okay, right from order to till receiving cash from the customer, everything can be handled in this cycle. That is the reason this we call as order to cash cycle. Primarily, these three applications are involved. To flow the data from these applications to other applications, these are the other applications we have. This we call as order to cash cycle. So today, if you get order from the customer, this is the process you have to follow. Tomorrow, you get the order from the customer, same cycle you have to follow. Recording the order, booking, quickly ship confirmation, creating sales invoice, doing the reconciliation, sending to this general ledger application. This cycle, this is a cycling activity which will keep repeating. Okay, that is the reason this we are calling as O2C cycle. So in O2C cycle, the primary applications are these three. Other data flow purpose, these are the other applications we have. Any questions on this, please?
Yeah, Lakshman. So once if you receive the sales order, so once we record the sales order from the customer, will we raise any PR, internal PR to the inventory department?
No, no, no. If stock is available, you don't need to raise anything. Okay. If stock is not available, if you buy and supply, then you can raise the requisition. Otherwise, no additional activity is required. You can just put the sales order.
Okay, we can directly pick from inventory and we can
Yes, yes. Exactly.
deliver to the
Yeah. Stock information would be available in the order management. Hence, order management with inventory.
Okay.
So
Yeah,
one
thanks.
question. When the customer calls sales department for order booking, customer may do cash or credit purchase, right? So how will a customer know that the sales order is booked? How will when they come for pickup, what document will the customer bring as the evidence that they have the genuine customer? What is the standard Oracle document?
See, simple. When somebody is our customer, you don't need to validate. Okay. When somebody is customer, you don't need to validate any documents. Simple point. Here, customer will place the order. Okay. Customer will place the order. When you play, the customer will place the order, you book the sales order. So if you are going to provide on some credit base and all, then there will be separate team who will just go and verify the customer profile and all. If it is a normal like the payment what customer is giving an advance and all, it totally depends with the customer. Say you have a customer, you have to supply some material. Customer is new. You can ask the customer to pay some advance. Then only you are ready to supply. The customer is very much known customer. In that case, so you are dealing with the customer for many years. In case you may not require any credit, directly proceed with this process.
Perfect. But sir, my question is, suppose how will I know? Because the customer maybe somebody called the sales team, supply 100 laptops. Okay. Now, how will I know that the genuine person of the customer has come for a pickup? Is there no evidentiary document which Oracle generates?
No, no.
How will I verify? This is a somebody falsifies and come in for pickup on behalf of the customer. How will I know who has picked the document?
Reality, we'll ship the material to customer location. Of course, if they are interested to come and pick that material, that's
exactly. If it is X works, how will we solve? Ship to is fine if I'm shipping to the customer address, but X works.
Yes. In that case, you will create an invoice and you will send to the customer. Okay. You will create the invoice.
Sir, invoice confirm. Agreed, sir.
Yes.
But invoice is generated after ship confirm.
Yeah, you can.
So you are saying
you can give
go
the
ahead,
form invoice also before all these activities. If that is a business scenario.
So performa invoice is okay. Good, sir.
Or else
point taken. Performa invoice can
have some internal process in these scenarios. How they want to handle.
Sir, why I'm asking, performa invoice is it part of the standard Fusion?
Yeah, not only Fusion, in any application, generally business does that.
Okay, great. Now, second question, sir. Coming to the credit check you just mentioned. So, once the sales order is booked, before booking a credit check is done for the customer. Is that a standard functionality?
Yes. When you are trying to book whether the credit limit is available for customer or not, system will consider. No credit, it will place the hold. You cannot proceed further.
Okay.
Is not done.
How flexible? Okay. Okay, sir. How flexible is the rules in the credit check functionality? Or is it like a standard rule based on the profile of customer or something?
Yeah, standard rules only. Based on the customer profile you can do. Many companies, what they do, they customize in case of on-premise. Take EBS, there are many customers.
Correct.
Based on their company.
Correct, sir. So,
the credit and all, they do
how will... Right. So how will that be handled in the SaaS? Because customization is not there and credit check is a very standard functionality.
You have to use the standard only. If you want to do your own custom rules and all, in that case you can go with the PaaS, or else those rules are very simple rules. You can go with the personalization.
Okay, and see, there is also some companies, they offer discount on the volume sales which is not upfront disclosed. Like in a quarter, if you buy say 1,000 laptops, then I offer you discount after the quarter. So these rules are again customer specific.
Customized.
Each company has rules. So
See,
how will this, is that supported by SaaS?
see, here you can have some straightforward rules by saying that this is the quantity, how much you discounted, etc. Those you can set. But quarterly ones, hourly ones, and some other conditions, those all need to be customized. In SaaS, you cannot do that. Yeah. What is the standard product functionality that you can use in case of SaaS? That's all. Apart from that, client wants to do something. That's a simple thing, means the personalizations will support. More than that means you cannot do with this SaaS. Best option, go with the PaaS. See, any company is going to take this SaaS or PaaS, first they will look into how the functionality will be supported or not. This all will be validated in case of sales, pre-sales meetings with the client. Okay, sales team will go and they will give the pre-sales team will go and they will give the proof of concept and they'll sit and discuss everything can be handled or not. Whether they have to go with the SaaS or PaaS, they'll take the decision. Then finally implementation will come into the picture. Okay. So as per their business and customization need to be done, they'll go with the PaaS only. If that is not a critical customization, simple customization, they'll think, okay, we can ignore this. Better we can go with the SaaS only, where the latest version can be automatically upgraded. We can enjoy that flexibility of features, etc. What Oracle is going to give whenever they release, they can get. So that's a business decision. Okay, it all need to be done before we start with the implementation. Client will take decision. Our sales, pre-sales team will help the business to choose SaaS or PaaS. We don't need to do anything. The consultants. Okay. So somebody is unmuting and they're please go on mute if you don't have any questions. Even if you ask any questions after question, please go on mute. There is a lot of noise from you guys. Please take as a request. Okay, done. So this is what we have to understand. This is a completely cycling activity. These are the three primary departments which are involved. Okay. Now, if you look at these two cycles, okay, this is the P2p cycle, this is the O2C cycle. If you look at these two cycles in one go, this is how you can see. I taken the short names here. This is the P2p cycle. So inventory, requisition approvals, then PO, purchasing application, RFQs, quotations, analysis, choosing the best quotation, GR, and purchase returns. Then the information will pass to AP department, nothing but accounts payables, fusion accounts payables, purchase invoice payments. The AP will share payment information with the cash management for bank statement reconciliation. And the AP will share asset information, asset invoice information with the fixed assets. The fixed assets, you can maintain the assets and you can calculate depreciation. And finally, like the bank statement reconciliation will take place here. This is a P2P cycle. When you talk about O2C cycle, this is a cycle which you have to understand. Inventory, the order management will record the sales orders, they book, quick release, ship confirmation, sales returns if required. And based on the ship confirmation, the AR can record sales invoices and receipts. AR means accounts receivables. The AR can share receipt information with the cash management for bank statement reconciliation. Finally, all the data will flow to GL for financial reports. So these are the three departments or three applications which are involved in the P2P and O2C cycles. These three are part of P2P and O2C. And here, other than general ledger application, these all applications we call as sub-ledger applications. Sub-ledger applications, because from all these applications we'll get the data into GL. Compared to GL data, all these are subparts only. That is the reason, other than GL, all applications we call as sub-ledger applications. These applications we call as SCM applications. Okay, the inventory, PO, OM we call as supply chain management. And these applications are core financial applications. Okay, financials applications. So primarily our focus would be learning these applications. Along with that, expense, tax calculation, those also we'll see with respect to small applications. And when we are working on these applications, if you don't understand how the process can be initiated and all, so it's like half of learning. That is the reason what we'll do is, along with these applications, we'll see how these requisitions can be created, how purchase orders can be created, how receipts can be created. Based on that information, how invoice can be created in the payables. In the same way, how to create the sales orders, booking, quick release ship confirmation, how to create the sales invoice based on the ship confirmation, the system process we will cover. Our primary focus would be on these financials. Along with that, we'll learn what are the level of knowledge we require from these applications. System point of view, we'll do the setups and we'll test the process flows so that you will be comfortable with the P2P and O2C, but primarily will be okay with the finance. After completing this course, you can work on the financials as a financial consultant, but not as a SEM consultant. Okay, if you want to work on SEM, you have to learn complete SEM. We'll learn basics of SEM because our area is financials. So these are the points you have to understand. We're done for today. If you have any questions, you can stay back, or else we are not going to discuss anything. Any questions from anyone, please? We're done for today. Any questions from anyone, please?
A quick question on the first tab, like on the purchasing P2P. In that, like just come back on the expense type of transactions. I know you'll come like later with the
I'll show
detail
you
level.
the system. Now you don't need to worry about it. You try to understand the process flow. That's more than enough in this stage. Okay, when you are getting into the system, when you are performing the transaction specific related questions you can raise, no issues. Now just try to understand the process flow. What?
Oh yes.
Inside, no need to see in this case. Flow you have to understand. Target.
Okay, sure. I think you can bypass so many things. So that's what my question. Probably you will try to show later, I think.
Okay, bypass so many things. Yes, now we can discuss what you are trying. See, in this process, every time you don't need to go with this. This you can bypass.
Right.
That is, those are compulsory. See here again, without creating the requisition, these also, without creating requisition and all also, you can create the purchase order. If organization policy is that, if they're ready to follow that process, yes, these are all activities they can bypass. Directly they can create the purchase order. Or else all you can bypass this, you can create the purchase invoice also. But the integrity, the data integrity will be missing and the controls will be missing if you do like that.
Okay.
If you make the payment, if you make the payment against which invoice. If you have invoice against which receipt. If you have a receipt against which purchase order. If you have a purchase order is against which requisition. That's how they should have a proof of documentation in the organization. Okay. If something if you want to bypass, there should be a strong reason. If organization policy allows, they can do it. Otherwise, this is a standard process which organization follows. Yep. Any other questions, please?
Thank you.
Yeah, Lakshman sir, one question here.
Please.
On the basis of purchase order, can we do some kind of budgeting that financial department is not allowing some budget for that quarter?
Answer is yes. Yes.
Okay.
Even
so
requisition
it's
also
available in seeded functionality.
Yes, seeded functionality, standard functionality we have. Requisition also you have, for this also you have. Even directly in the GL also you can use the budget functionality. They're given standard functionality.
Okay. Thank you, sir.
Yeah. The finance side, what are the budget we can use that will cover in our classes. Okay. Any other questions here, please? It seems to no questions. That's all for today. We'll connect tomorrow same time. Thank you all.